What are the best trading setups for this week? Well, let's go ahead and dive into that together. Today, we're going to be taking a look at currencies, indices, and metals, and talking about the top setups for traders who trade futures, Forex, all sorts of good stuff. So let's go ahead and jump in here. We've got a busy one, so I'm going to start out here by first saying, if you enjoy my videos, make sure to hit the thumbs up button. Again, like I mentioned, we're going to go through a lot of different markets here today. You can see a preview on the right-hand screen. We've got all sorts of different markets we're going to pull up, starting with the dollar index, because if you watch my videos, then you know I generally like to start with the dollar index because it's at the centerpiece to a lot of different charts. What do I mean by that? Well, if you trade gold, then you clearly are interested in watching what the dollar is up to, because a stronger dollar means weaker gold, a weaker dollar means stronger gold in 9 out of 10 cases. Now, what about if you trade futures, indices, etc.? What if you trade, Nasdaq or all that sort of stuff? Why does the dollar matter? Well, it matters a ton because right now the dollar is weighing heavily, or it's weighted heavily by what is up with the Federal Reserve. And if the Fed is going to cut rates, indices are going to love that. And if the Fed is going to hold off on rate cuts, it could be sort of neutral to even negative. So we like to keep an eye on the dollar for that reason. And if you trade currencies, it's pretty obvious. If you trade the euro and the dollar against each other, or the pound against the dollar, of course, that is going to have a lot of impact. Well, that's why we like to start with the dollar index, which has pulled back here recently, but it's had a lengthy pullback, but not a steep one. Let me illustrate what I mean by that. We've had from the top here, which I believe this was the CPI week where we had PPI and CPI both hotter than expected. We've seen a pullback of 1, 2, 3, 4, 5, 6, 7, 8 days, let's call it. Yes, not all of these candles are red, but in the dominant direction, we've been 8 days to the downside. Now, despite it being 8 days, we haven't seen this massive crash in 8 days. We've seen a very controlled pullback, and noticeably so because we are holding at support. You had this wick that came underneath that supportive level, but buyers were able to step back in and hold that supportive zone. Right now, I think it would be a foolish thing to just assume that the dollar is going to continue to roll over simply because we have not broken this level of support decisively on the daily chart. Again, we look left. This was a key area for the sellers before they took it much lower, right? And now coming into this area here, we have seen this be a sort of stronghold for the bulls after this breakout. Now, let me speak candidly about this, though. If we do break underneath this week, it's time for me to admit that the dollar bullish train may be over. We may be at the station and pulling off here for a little bit. So for me right now, this is a pivotal week. As we go into this week, we do have core PCE numbers, which if you don't know what that means, if you're newer to the channel and you're trying to learn fundamentals, the PCE number is a inflationary metric that the Federal Reserve themselves have mentioned is their preferred way of tracking inflation. Again, it focuses a lot on consumer expenditure, right? The prices that consumers are paying for. That is part of their main goal as the Federal Reserve, is to try and keep prices under control so that the economy doesn't get insanely terrible, right? Because if prices run too far, it can really hurt consumers, as we've already started to see in many ways. Anyways, the dollar index, like I said, from a technical perspective here this week, is sitting at support, but PCE numbers and other things that we may get into in today's video will likely impact whether or not this rally sustains itself or not. If we get a big push, the next spot of target for me would be the 106 mark. Next, we're going to talk about gold, but before we get into the technical chart, check this out, guys. We actually have a bullish reading on the gold asset list here on the top setups algorithm. Now, if you're newer to the channel, the top setups page on the Edge Finder, which is my company's software, what it does is it looks at all sorts of different factors. You can see them littered across the screen. You have the commitment of traders data, which we'll get into today, retail positioning, seasonal trends, the trend of the market momentum-wise, economic figures, inflation statistics, labor market statistics, and interest rates. We're looking at all these variables. These are real-world forces, and to ignore them, in my view, is foolish. The market moves based on these things as well as other things, but these are the big ones. This is the driving forces of the market. So when these driving forces are generally saying that gold looks more bullish alongside oil, we're getting some commodities bullishness, and the indices are nowhere to be seen. More on that in just a moment. There's something I need to tell indices traders, and we're going to talk about that in just a second. But again, gold and oil, keep a close eye. We're getting a score of +5 in the Edge Finder. Big portions of that are the commitment of traders data, showing that institutional money seems to have gotten long. We'll come back to the Edge Finder in just a second, but let me pull up gold's price action chart. Now, I've been pretty consistent with my thought process on the gold chart. The daily chart has been horrendous. It's been really back and forth and choppy. However, on the move here recently that we've seen, it seems like we're making a mad dash for that 2055 level, which historically has been a key level of resistance. It does seem like we could get there, especially with the Edge Finder now pointing bullish. That's an indicator that I, of course, pay close attention to. We've put a lot of work into designing the algorithm that's there. So when we look at this and we look at the 4-hour chart, I want to talk a little bit about this. Again, we mentioned that a possible short-term target could be this move up to the 2055 an ounce target zone. Now, so if we go ahead and mark this as a 4-hour supply zone, we do need to acknowledge this for what it is. It's a key level on the daily chart. So while that is kind of our short-term target, if you're somebody who trades on a, maybe more of a short-term swing trade or a day trading side of things, we could acknowledge this here as well, which is basically that we've been in this nice lower time frame upward trend. And perhaps there's something to be said for trading the movement from this breakout here up into this zone. I'll leave that with you, although I personally won't be taking this trade. The thing that I do like about it is that if we do get up there on the daily chart, if we start to see the breakout, I am very much intrigued in gold longs. So I'd like to see that 2055 break personally, but of course there are different types of traders that watch my videos, so I understand if you're a swing trader or a day trader, you might have different sort of entries and styles. I don't hate this trade, this move from where we're currently at, trading it up to 2055 an ounce. But for me personally, I'll be waiting for that breakout on the daily, just as I am more of a swing trader than a intraday or short-term trader. But again, that move very quickly could continue to fill that gap, and day traders, swing traders, have at it. If you see a strategy set up for that fits yours, then hey, by all means. Here's the thing about gold right now. Again, when you see the Edge Finder giving it a strong score, we've got to talk a little bit more about that. And here's the culprit. It's the commitment of traders data. The COT data allows us to look at what institutional money is doing. What are they buying? What are they selling? No guesswork, no looking at candlesticks and saying, oh, this is big money, this is an institutional candle. No. None of that. You know why I say none of that? Because that is just guesswork. You don't know what candles are telling you. Candles, by the way, I don't know if you guys have ever heard of dark pools. You can look them up. There's a lot of liquidity that doesn't get reported nearly as clearly. Regardless, what does get reported very clearly is the COT data. This is something that is tangible. It is something that is real. It allows us to look at what institutional money is doing, and we pull that data in automatically for our users each week with the software. And check this out. So we saw that gold was a big one on the Edge Finder's outputs scanner, right? Gold, let's go through it together. On the latest COT data, we see that there's a lot more long contracts than short contracts. So first of all, that's bullish. But let's go through this. The change in long contracts, they decrease longs. So that's not necessarily bullish, but here's what is. They changed short contracts dramatically. Shorts closed big time, minus 15,565. That's a huge change. The net long percentage is just about 75 to 25, and the net change over this week, right, latest filing change, 3.3%. That's huge. So there was a huge bullish swing in gold, and this is to my surprise because I'm not necessarily a super, bullish person on gold right now, but this changes my view a lot. When you see big money really moving into an asset like this, it's something to pay attention to. Of course, you can pause the video if you'd like to look at other assets. If you're somebody who's watching the dollar, I know a lot of traders watch the dollar close. There's a slight bearish decline here week over week. If you take a look at the S&P 500, another popular one, and the Nasdaq, both of these saw hefty sells, but the Nasdaq especially. And again, I mentioned just moments ago, I teased that the indices look a little sketchy to me. I want to add something here. While we're looking at data, let's stay informed, and I'm going to show you a very important chart. We're going to look at seasonality, and right now you can see the red line is the S&P 500 performance. It's just been going straight up, but look at the times that we are in. The blue line shows the 10-year historical performance of the selected asset. You can select any asset you want, by the way, and if you have the Edge Finder, I encourage you to click whatever you want. If you want to look at the gold market or Euro USD, whatever chart you'd like to look at, feel free. Head over to this new page, the Seasonality Weekly tab. It's been built for you. It's all ready to go. Play with your data. Have a great time with it. Here's the thing that I thought was interesting. We are going into one of the historically worst periods of the year for the indices. And at the same time, COT is selling. So COT is selling and seasonality is pointing bearish. It's no wonder that the sort of outlook here on indices for me is going to be a little bit more bearish in the short term. Now, I'm not necessarily saying I'm going to short this thing because I still love the fundamental story overall for indices this year. But as we look at this and we head back over to the charts, we've got to consider we are going into a historically pretty poor period of time in terms of historical performance for the S&P 500. Before we go to the charts, let me just remind you also you can get a copy of the software. If you're interested, you can pick it up for a discount using code YTVIP down below in the description if you want to pick it up today. Or if you'd like a 30-day trial, there is an option to do that. You can apply for it and someone will get back to you within the next couple days. So just use that link down below in the description to fill out our trial application and someone from my staff will reach out to you. We handle these on an individual manual basis to make sure we can answer your questions to make sure the product is a good fit for you. All right, and here's the S&P 500. What we can see here is that we've had an interesting close to this last daily candle. As I mentioned, COT was pretty bearish. And as we look at this daily chart, I am still bullish on this chart. This thing looks really strong. However, it probably is due for a little bit of a bigger retracement. Again, we look at seasonality, a tough time for the S&P 500. We also just look at the fact that if you take a look at the weekly chart, this thing has just been nothing but a straight shot to the upside. And markets don't move like that forever. So what's happening, I actually saw a tweet that I wanted to bring attention to. Now, transparently, I saw this tweet about 2 weeks ago, but somebody made a tweet that was, I should say, an X post, I guess. Someone posted on X.com that they think that the easiest strategy in the world is just to wake up, step one, step two, buy the Nasdaq, and you're just profitable. But I just want to caution, and I don't know that that person was kidding or not. I mean, obviously, that's kind of a funny thing to say. But when you guys who are watching the Nasdaq, you have to remember, if you haven't been around for a while, sure, that looks like an easy chart to trade. But if you weren't here in 2022, where this was your trading scenario, you have no idea how difficult the Nasdaq on the long side can be. You know who does? Me, because I lost some good money during this time. I was long biased for way too long in 2022, and I really, really struggled. I had a drawdown year because a lot of my trading is on the indices, and a lot of it predominantly is long biased. Now, I controlled my drawdown. I didn't get out of hand crazy with it, but this period of time was tough for me. And I just want to reiterate that indices do not go up forever. They don't only go straight up all the time. They have terrible periods. There's drawdown periods. And if you're too leveraged or you're, getting too arrogant with your entries, suddenly a period like this will wipe you out. Trust me, it's very, very hard to trade long side during this time. Now, of course, if you're short biased during this time, you make a tremendous amount of money. Indices typically drop very, very quickly when they do. So that's where I caution people who are looking at these charts and saying, hey, this thing is, just easy. You just trade it long, you make some money. Again, be very cautious that, when that pullback comes in, it could be quick and it could be aggressive. I tried to get long over here, and this was incredibly painful for me. I've been transparent about it, as I always try to be on my socials. This one has been tough to talk about. I went long Nasdaq, bought this thing, rode it up, didn't move any stops, didn't do anything with it because I figured, hey, if it breaks new highs, I'll go ahead and trail stops. Well, it came all the way back, trailed me out for a loss, and then ripped without me. So am I a little bitter? Am I a little frustrated with it? Yes. But speaking logically here, as I went through the seasonality data, I went through the commitment of traders data, I do think it's appropriate to not try and chase this thing and to wait for a proper pullback. Sure, this was not fun to experience, but it happens to everyone. And the worst thing you can do is get angry or frustrated at a chart to the point where you actually take a bad action in the markets. I don't think that it's wrong to admit that you're frustrated by something or to admit that you're a human being. However, what is wrong is to let those opinions and feelings impact what you actually do, right? Your actions are way more important than, hey, I'm a little frustrated by this. It's okay to be frustrated. It's not okay to make bad decisions based on it. So for me, the logical thing here is, okay, we've looked at the data, we've looked at the edge finder, we have a bearish confirmation. And I just want to say, in real world trading, this is why the edge finder is just a remarkable tool. Genuinely, I know, obviously, I sell it, I built it, so I'm going to think that. But genuinely, having a tool to assist you in that logical thinking is remarkably, remarkably important. Because if you don't have a systematic way to say, hey, should I be taking this trade? You're going to be just guesswork. And I understand many traders who are listening might feel this way, where I'm saying, hey, like I'm sitting here and I'm like, am I making a judgment call that's preemptive? If I'm being too emotional with my trading? The edge finder helps me personally to take that feeling out of the picture. I can look at data and I can say, hey, if the top setups doesn't have a setup on the Nasdaq for me, then I need to wait. And that's okay, right? Nasdaq's getting a neutral reading. There's no reason for me to chase a trade. I'm waiting for my pullback. I'm waiting for my setup. I'm waiting for scenarios to stay in my bullish outlook before I actually enter trades. The clarity that comes with that is absolutely unmatched. All right, and I imagine some people will just be wondering this too, because I know a lot of you guys trade gold. Here's the 10-year historical seasonality for gold. I thought this was kind of interesting. We're actually entering into a period that is historically bullish for gold in the last 10 years. So very interesting. I think I'm going to find myself a little bit more on the commodity side of things in the coming weeks than in the indices. But that'll be personally where I'm looking to watch out for trade setups based on seasonality and, of course, the other economic metrics we look at with the software. Another big thing that's going to impact all of these charts, whether you trade gold, the USD, etc., is, of course, what the Fed does next. And I wanted to have a look here with you guys at what markets are forecasting in terms of interest rate decisions coming up. So in May, there is a 74% chance that they hold interest rates. It now seems pretty clear that we're not going to get cuts in March. We're unlikely to get cuts in May, and that June may even be getting called into question. You can see there is a 52% chance that we see our first rate cut in June. It's essentially 50-50 between that and July. So are we going to see rate cuts in July? Well, the expectations is pretty good that we'll see rate cuts by July. But remember, guys, and I've been saying this for some time, we've been saying on this channel that we're probably not going to see rate cuts in March. The market got super excited about March rate cuts. We pointed, hey, economic data is just very strong. Inflation statistics are not meaningfully moving down with momentum. That was kind of something that Frank and I were notoriously saying on our streams over and over, and we turned out to be very right about that. We don't get it all right all the time, but this has been something we've been dead on with, which is economic data reads have just been strong, strong, strong. Now, they're not perfect and they're showing signs of cooling. That's why I still think there will be rate cuts. But the idea that we're just going to get instant rate cuts here this year was a pipe dream. And I do think that that could be part of the reason that we see a little bit of a pullback in the index once they sober up and realize we're not going to get rate cuts as fast as everyone thinks. The indices could be in for a 5% pullback or something of that nature. So continuing to watch that here as we go into the new week. And speaking of the new week, here's a couple things to keep on your radar. By the way, we will be live streaming many of these events. If you have not already, make sure to click the subscribe and turn on the notification bell. If you want to join us for live streams, I know a lot of you guys just watch my videos, but highly recommend when these events are turning on, or coming on, turn on my channel and come watch the videos or watch the live stream. We go live for these events throughout the week, myself and my team. We get a cast of rotational people that come in. We have guest hosts. We have all sorts of stuff. So if you're not watching the streams, make sure to tune in. It's great free value. Anyways, consumer confidence comes out Tuesday. This will probably be the big event for US data on Tuesday. Obviously, it's the only red folder there. We do also get some decisions out of New Zealand. The cash rate, are they going to cut rates? Unlikely, but that's kind of where they're at. We're going to get their policy statement. So if you're a Kiwi trader, if you trade any of the Kiwi pairs, could be interesting there. And also gold pays attention to these sorts of events, generally speaking. GDP, preliminary GDP comes out 8:30 on Wednesday. That'll be, of course, an interesting mover, especially for gold traders, right? GDP is a big one there. And then we also have on Thursday, we have the big one of the week, I would say, which is the core PCE price index. This is, of course, as I mentioned earlier, the Fed's preferred measurement of inflation. We have PMI numbers from China. I personally will be interested in this, and so will commodities in general. Of course, if China's showing growth, it's good for commodities because they are a huge consumer of them, copper, oil, etc. So keep an eye on that. Silver as well. That will be key for commodities and, of course, people who trade the Chinese stock market, etc. The same thing. We have another key figure here. We have PMIs out of the U.S. manufacturing PMIs coming out on Friday, and the revised consumer sentiment as well. So pretty big week here in front of us, guys. I do want to mention again, this will be a very active week inside of our VIP group as well. If you're not already inside of there, you can find information about that down below in the description. And I also should mention that if you would like to trade things like indices and gold, I know a lot of traders in the US are wondering how I can trade these things. I get that question very frequently. It's because I use a broker called WeBull, and there will be a link down below in the description for WeBull. And if you're not in the US, there's also other brokerages that have great sign-up perks for my listeners, for my viewers. So if you have not, or you're looking at getting into a new broker, there's some great regulated options down below in the description, and they come up with some wonderful sign-up perks. So if you made it to the end of this video, make sure to check those out, because again, they can hook you up with some really cool free stuff. So there you go. Thank you guys for watching. Have a great trading week ahead.